Hi, this is John Murphy with CSSI, and I wanted to talk with commercial appraisers, specifically talk to you about improving your profitability and growing your revenue with cost segregation. This is a great add-on service, value add for you to do. Very simple. You don't need to be an expert at it. You can just understand a little bit about this and then make connections. So let's get into it. My name is John Murphy, again with CSSI. We're a firm that's been around for over 20 years. We are, if not the largest, one of the largest in the country that does this. We've studied about 45 or 50,000 commercial buildings, all asset classes, all types, all 50 states. I can work in all 50 states, and happy to chat with you about that, how we can work together and help you grow your appraisal business and generate more revenue. So did you know that building owners can save between $30,000 and $70,000 per taxes per $1 million in building cost? And I say no one is telling them about this, but the fact of the matter is it's not being discussed a lot. Certainly there's certain segments of the market that have kind of grabbed hold of this, but in the commercial space, this still is wide open and is available for people to introduce this to clients. So, you know, as appraisers, you guys play a key role in commercial real estate. You already have a relationship with the building owner. It's really easy to bring up cost segregation. You're helping the owner with their business, and you're growing your business as well. So commercial real estate, the opportunities for you as far as a value-added service, additional revenue, it's easy enough for you to introduce your clients, help them save money. It improves their cash flow, improves their returns. It reduces their immediate taxes by deferring them. Client tax savings might be such that they might want to go out and buy another building, and then you can do another appraisal possibly. You would earn referral fees. This is also just great value add and consultation that you can provide your clients before the competition does. Another great way to build customer loyalty and differentiate yourselves in the marketplace. So in terms of appraisers, you know, you're talking with building owners quite regularly. You know, let's say the average cost of one of our studies is about $5,000. They do vary, and it gets priced based on the size of the building, the complexity of the building, the basis that we're studying, etc. But let's just say on average it might be $5,000 or $6,000. That's a $500 referral to you. You get paid 10% on our fee when you refer somebody to us. And I would say that as I talk to a lot of different building owners, about 6 or 7 out of 10 have never heard of cost segregation. So imagine if you could introduce this to the people that you're doing appraisals for, or maybe you've done appraisals for. You could reach out to them to see if this is something that they have done. And if not, we certainly could put together some numbers for them. But let's say you help 10 different owners each year and you make $500 a referral each one. You know, that's $5,000 in referrals fees to you. The owner might save 50 to 100 grand. Some of these guys save a lot more than that on their income taxes. You've differentiated yourselves from a crowded marketplace, and you can refer this to an owner anywhere in the United States. Just because you might be licensed in a couple of states doesn't mean we can't do cost segregation for that client in a different state. And I work in all 50 states, so I'm happy to work with you on that. Commercial property, you know, let's just go through a little bit of that just to make sure you're up to speed on it. It is depreciated over 39 years. It's basically 1 divided by 39. That's straight line depreciation method. It's about basically 2.5% of the building cost each year they get to depreciate. You've got to back out the value of the land. So $1 million building would give the owner about $25,000 in a depreciation expense every year. When you do cost segregation, you're likely going to see something like on the order of 6 to 10 times more depreciation earlier in the life of the ownership of the building than you would with straight line depreciation. So it really is a tax deferral, and we always say that owners should consult with their CPAs before they do a cost segregation study. And one of the questions I get asked is, how often can this be done? Well, basically, it really could only be done once per ownership. So if the building trades hands, you know, if it trades, then it can be studied again. If there is a new owner that comes in, that can be studied. If it is an addition that's being done to the building, if there's a significant improvement that's being done to the building, all of that stuff can be reasons why someone would do a cost segregation study. Commercial property. So for example, let's say we had a building that was placed in service July 1st of 2024. Purchase price $1.2 million, land is $200, so we've got a basis of $1 million just for ease of the math here. We're going to run at a 32% tax rate just on average, just to throw that in there. It's going to vary from customer to customer. And then bonus depreciation in 2024 is 60%, meaning they can take 60% of the depreciation on assets that are less than 20-year class life. They can take 60% of that in year one. So a straight line depreciation in this building, they're going to get $1 million and times 0.025 if it was for the full year, but it's only for 6 months. So they're going to end up with $12,500 depreciation in year one. If they do cost segregation, as an example, they're probably looking at about $120,000 in depreciation expense. So it's 10 times more depreciation they could take in year one. Building like this, I don't know, depending on the building, it's probably $5,000, $5,500, something like that. So for commercial real estate appraisers, you are not cost segregation experts. All you need to do is make the introduction and the connection, and our team will take it from there. Really, any building, if you're studying improvements, if that would ever come up, any building we can study really over about $200,000 basis, or a significant renovation or upfit also can be studied and probably should be studied. And cost segregation sometimes doesn't make sense for some owners. It just doesn't. They're not profitable. A couple things going on. They might be ready to sell the building. Not a great time to do cost segregation. Maybe they did a 1031 exchange into the building and there's not a lot of basis. So we get it. It's not for everybody. But for the majority of commercial property owners, they absolutely can take advantage of this. So best practice, I would say, for commercial appraisers, right, is let's have a conversation. We can talk to you about our business, and you and I can get to know each other a little bit. If you decide it's something you want to do, you might want to offer this as a list of services on your website. It's easy enough. You don't have to mess around with it much. You can include it in your email communications, maybe with a link to that part of your site. Encourage customers to get an estimate done on cost segregation. You could have a dedicated page to that if you want, just with a contact form. Easy enough. They fill it out. You send us the email. We generate the estimate for them, have the conversation. If they decide yes, they want to do it, we always encourage them to talk to their CPA. If they say yes, we'll get going on it. We'll do the study. Obviously, they pay us, and once they pay us, then we send along the referral. And it's easy enough just to have a conversation with them. Have they done cost segregation? If they haven't, certainly happy to take a look at it. If they're thinking about doing it, maybe they're open to getting a quote from you and one of your business partners. So what kinds of properties does cost segregation work on? Really any property that's deriving a rent payment or a lease payment. So all kinds of buildings, industrial, self-storage, hotels, motels, apartments, Airbnbs, real estate investment, car dealerships, mobile home parks, you name it, we can study it. Ground up construction, existing construction, brand new properties, resales, renovations, properties where owners are planning to hold it for more than 2 years. If they're going to flip it, it's probably not a good idea to do a study. I'm going to run through just a couple of properties here for you to kind of see what this might look like. Here's a 50,000 square foot office. Basis is $2.3 million. Cost of the study is about $5,600. They're going to save about $90,000 to $100,000 on income taxes if they do a study with us. So you can see it's a huge return. When we deliver the studies and the reports, we break down all the materials, all the components and systems, categorize it all as 5-year class life, 15-year class life, and then the structure, 39-year class life. In this particular case, these owners, they would have gotten 2.5% each year, but instead in year one, they got something about 23% they were able to get. Here's a retail strip. They got 25% of the building costs were accelerated because they did cost segregation. That's a tax savings of roughly $100,000, $125,000 for these owners. Dental practice. We do a lot of medical offices, a lot of dental offices. There's this concept called grouping. Phenomenal tax strategies, particularly for these dentists and these doctors. But on this one, you can just see we were able to identify about $500,000, so almost a third of this building was able to be accelerated. That's an enormous tax savings for this dentist. Starbucks, these are great. These QSRs, phenomenal, partly because of the development site itself. The land improvements are so high. You can see here, site improvements here were at 28%. That's massive. It's a huge deal for the owners who own these buildings. Retail, same thing. Here's a Dunkin' and a Banfield. We got about 35% on that, was able to be accelerated. And again, what that ends up translating to over here on the right side is $370,000 in tax savings for the owner. Now, if you can't use all of that tax savings, it just is a carry forward. It might be a loss carry forward for him, and he'll just eat into that each year going forward until he's exhausted all of that. So it may be that he doesn't pay taxes for a couple of years because he got so much depreciation so much accelerated depreciation he couldn't use it all in the first year. Flex buildings, we do a lot of flex, office, warehouse, industrial. This is phenomenal. I mean, there's not a lot to these buildings, but these guys had a very large land improvement. They also have decent offices, so you can see they got about $90,000 in tax savings off of this. In hotels, we do these as well. Medical offices, these are fantastic. This one here was 32%, was able to be accelerated. Again, these are big numbers. Normally, again, that relates to 2.5% they would get each year, right? We're giving them 32% the first year. So it's a phenomenal return for them. So I will just say this, it's a lot of information I went through. We work on all kinds of buildings all across the United States. I work all over the place in all 50 states. Happy to talk with you about this, how you might incorporate this, easily into your practice. So it's a great way to add some extra revenue. I know there's not necessarily a lot of deals going on. Appraisal business might be a little bit slow. This is a great added-on service to your existing clients already. So if someone's going to introduce cost segregation to your building owner clients, the appraisers, why not have it come from you? That's all that I would ask. Why not have it come from you? We'd love to talk with you further, maybe strike up a little partnership with you, see if we can do some business together, help your clients, and help you grow your appraisal business. So let me know if I can be of assistance. My name is John Murphy with CSSI. I work all over the place. I run a blog at costsegbuilding.com. You can find me on the socials at costsegbuilding, and happy to chat with you anytime. Bye-bye.